All right. Now let's get into a conversation as well with the management of Dixon Technology, get a sense of the kind of demand trends that they're observing as well. We've got Atul Lall joining us this morning. Atul, good to have you with us. So let's just dive right in and understand, given the way we've seen sentiment hit post the second wave, how are things now shaping up? What's the outlook going forward?
So undoubtedly, the first quarter was deeply impacted by the second wave. But fortunately, the outlook that I am seeing and the order book that I am seeing from our principals across all the verticals in June and also in the forthcoming Q2 is healthy, is very good. So I'm cautiously optimistic because in our business profile, we service the brands. So one, of course, they're building up the stocks for the festive season on the basis of their own assessments of the markets. So I'm hoping that the secondary sale happens. But as of now, the Q2 order book across all our verticals looks very healthy.
Sure. Atul, do you think we'll see a release of pent-up demand like we did last year? Is that something that you anticipate? And also given the commodity price uptick this time, I mean, how is that thrown a spanner in the works for you margin-wise?
So I feel that in this fiscal, it's not going to be a V-shaped recovery. I think it's going to be somewhat a U-shaped recovery. So I'm cautiously optimistic and sanguine because this COVID wave was very different from what happened last fiscal. As far as the commodity super cycle is concerned, undoubtedly it has impacted the industry and it has impacted us also. So in our case, we have two business models. One is a prescriptive business model wherein we work on the customer's source sheet. So in that, there is an automatic transfer of the price hikes or whenever the prices reduce to the principal. That's a very large portion of our business. But there are some verticals like appliances and also lighting, wherein we provide our own solutions. So super cycle of commodities and the price hike has definitely impacted us. But to a very large extent now, we've been able to pass it on to our customers. And lately also I'm seeing through some state interventions in China, there is some level of stabilization. So I'm keeping my fingers crossed. I hope it sustains at least at the present level. And in some of the polymers, I'm also seeing some softening. So let's hope for the best.
Okay, so those are some of the factors then that you're actually keeping in mind right now. You've also, of course, been an approved vendor under the PLI scheme, and I think we've talked about this before as well. Are you in talks with any other global customers apart from the key headline ones that you already have? Nokia, Motorola, Samsung.
So customer acquisition is a continuous exercise. We are hoping and we are quite confident that we'll be closing with another large customer, mainly for exports to US market for 5G phones very shortly. And that execution should start by Q3 of this fiscal. I'm not in a position to disclose the name as of now, but we're fairly confident we're going to be close on this customer very shortly.
How much the PLI schemes have added to the visibility of business? These PLI schemes are game changers. So Dixon had a great business even before the PLI schemes were announced. Has PLI taken your business to a different orbit?
Yeah. For us, PLI is undoubtedly a game changer. We have already got approval, as you know, under the PLI for mobiles. And that's going to give a very significant flip to our revenue and bottom lines and financials in the current fiscal and over the next 3-4 years. We are a strong contender under the PLI for IT products, wherein we have signed an MOU with one of the largest global brands our laptops. So we are awaiting the results and the approvals from the government, which is expected in next 2 to 3 weeks. We are also pursuing the telecom PLI, wherein we have partnered Bharti Group with Airtel as an anchor customer for CPE products, namely IoT devices, routers, modem, GPONs, ONTs. We're looking forward to that. And just a couple of weeks back, the government has rolled out the PLI for white goods. So we are already a very large player in LED lighting. We're going to be pursuing the backward integration program under the PLI scheme for LED lighting. And so is the case for AC components. So we are a significant player in AC control board with a Japanese partner. We are planning to pursue and take this partnership to the next level so that India becomes a footprint for such items for global markets. So for us, it's a very, very big game changer.
The challenge which, when I speak to some folks who track your company, is that Dixon is doing everything right. Great business, great processes, scale, size, but the margins will always be very mediocre. That is the nature of the industry. What are you doing to ensure, whether it is productivity or process, your margins could expand by, let's say, 2 to 3%? Because that really adds up to your bottom line in coming years.
So you please appreciate that electronics core is a core component, electronics manufacturing. And our business model is very simple, that any vertical that we pick up is built around that core. We build a very large scale, which is almost at the global level and 30-40% of the Indian requirement. That generates an operating leverage for us, which makes us highly competitive and also helps us in expanding margins. Further, we deepen the manufacturing through the backward integration space. And finally, for every product, we aspire to be the owners of design. Now, all these are steps for expanding the margin. In some of the verticals, we've already achieved that, namely LED lighting and washing machines. In LED televisions, we have been able to do up to some extent. Across all the other verticals, the journey has just started. So this is the game plan. We have already done it, and we'll be pursuing the same strategy, which helps us finally, one, of course, in expanding the margins, also makes us globally competitive, and also enhances the stickiness with the customer. So that's the way we pursue.
How effectively do you think the smartphone market is going to change and evolve? I'm asking you a very simple question because there was a time when Nokia was the dominant player, then the Chinese brands, they became a very dominant player. Is that a risk to a company like Dixon, which is that if the consumer preference they changes, some of your customers who are enjoying good market share, they suddenly may be out of fashion? I mean, another example here is Micromax or even Intex. These companies had great market shares, but right now they're at the bottom of the pyramid.
So appreciate it, and this is the nature of the industry. So in our case, we start with an anchor customer, but over a period of time, we acquire many new customers. So that's a path towards de-risking. So we keep a close watch on this, and customer acquisition is an extremely important exercise. So if you see any of our verticals today, we have 3-4 very large brands as our customer. So that's the way we pursue this. What you're saying is right. The customer preference can change. The brand can lose shield. So we always have 2, 3, 4 customers who are large customers for us, de-risking to a certain extent the dependence on a singular customer.
Sure. Atul, also wanted to understand, how exactly are you seeing consumer patterns change, much in continuation to what you just highlighted, and whether you think the demand for consumer durables, where do you see that headed over the next few years? Because since the pandemic, all of our consumption patterns have completely changed.
So I think even before the pandemic, consumer electronics, consumer durables is a continuously evolving industry. So you see in LED lighting, I mean, the whole industry since the times of Edison was analog. It was incandescent. It was followed by CFL. And then it completely migrated to LED. And now one can see that even in LED, there's a very, very fast transformation towards the smart solutions, home control solutions. Same is the case in other durables. It's all going to be sensor and IoT driven. In phones, although not many pundits predict it, but my sense is that even the phones, the smartphones in India, is going to migrate to 5G very, very soon. It's going to happen like that. So that's the change which is going to keep on continuously happening. And companies like Dixon, along with their design partners, has to be on top of it, aligning the manufacturing line, manufacturing infrastructure footprint for this change. So that's what I feel how the industry is going to evolve. Yeah.
Sure. Two quick questions again, Atul. That you've applied already for the IT hardware PLI scheme as well as we understand. What is going to be the product focus under this scheme, and what is the kind of revenue expectation that you have from this? And also the contribution of the low margin TV manufacturing has gone up. What's the outlook here going forward?
So IT products, when we are given an approval, we're going to start with laptops to start with. And we expect then in a couple of years' time, the revenues to be generated by this particular SKU would be somewhere in the range of 1,500 to 2,000 crores. As far as, apart from this, even without PLI, we have gotten into the domain of LED monitors. And this is without PLI. And we have already, our contracts are in works with two of the largest global brands for LED monitors. A capacity for 1 million LED monitors is going to become operational in the next 2 months. And we're going to start commercial production there. That would again generate a revenue of almost 1,000 crores for us in 2 to 3 years' time. So these are the two IT product categories which we have ventured into. In televisions, we have grown very well. In spite of the washout in the first quarter of last fiscal, we grew from 2.1 million to 2.7 million. We have very marquee kind of customers. We've expanded our capacity from 4.4 million to 5.5 million, which is more than 30% of the Indian requirement. And the order book is very, very healthy. We're deepening the manufacturing there. The SMT line capacity is being expanded to almost 3.5 million. We're deepening the manufacturing by installing the polymer processing unit, that's injection molding and also later sheet metal. So that's the path. And in spite of the first quarter, again, this fiscal getting impacted, we see a very heady growth in this business.
Interesting. Atul, great to have you on the show. Thank you so much for taking the time out and speaking with us.
Thank you so much. Thanks a lot.